And we on. Hello guys, how you doing? It's another day with Super Trader, and this is another day of trading with the trend. Listen, today I'm gonna be discussing with you the golden strategy. The video I made before about the indicators on this thing, on the MT4 platform, cut while I was recording, so I couldn't finish the webinar. So this is a continuation of that video, but nevertheless I'll still show you how I insert the indicators that I use, from the moving average to the MACD and to the ADX. So I'm just gonna jump straight away to this thing and start kicking it. So as you can see, this is the golden chart. I made my bulls this color and my red this color. Gold to me is unique, so I want to trade it in a certain way. So before I start anything, I wanna go to the daily chart so that I can see where the trend is at and draw my major lines. I'd like to turn this into a line chart so that I can see the overall movement of the trend, and then I can draw it. So first I'm going to be drawing my resistant lines and placing them at the major points. You guys must note that I'm just placing these points at any random place where the market seems to be sharply turning. Alright, I think this is enough. So one thing you have to know is that if you're going to be trading, if you trade the 4 hour, you want to be plotting your trends on the daily. If you trade in the 1 hour, you want to be plotting your resistances on the 4 hour. I prefer placing my trend directions my resistant lines on the daily, and then also on the 4 hour. Because one thing that you have to know about this is that every line of resistance or support line is very important. Like, let me say this: every support resistance drawn on the minute chart, it means that resistance is only available and can only hold for a minute. On the 5 minutes, it means that trend is only strong for the 5-minute chart, and the 15, it means that it means that resistance or support line is only strong for 15 minutes. So this is why I choose to place my support and resistance lines on the daily, because they hold for a whole day, and I trade the hourly. Then I go on the 4 hour chart to just check for points that I've missed and place resistance lines there, and place lines of resistance there. Hey, what is it doing, this PC? This way I can have a better idea of the sentiment of the market. And then once that's done, you want to be doing this. Go back to the daily and observe. Oh my god, MT4, what is it doing? You go on the daily and you want to be observing the full motion of the trend. So let me go on the weekly, and as you can see on the weekly, this is a box zone, so meaning this is a consolidation that is occurring in this in this downtrend, and the overall trend is an uptrend. So this means that gold is going to be trading in this zone for a while before it either breaks up or breaks down. So that is why I do this, because I want to see. Now look, when the price action moved up to this point, it rallied down, and when it got here, it moved up, rallied down, moved up, moved down, up, down, up. This is probably gonna be the pattern, reoccurring pattern, unless it breaks up or breaks down. So then I'll go on the daily, since I'm a day trader, and I want to be drawing these lines of resistance. Oh my god, what's wrong with, what am I doing today? What am I doing? So you're gonna be drawing it up like that, and then you got your uptrend, so you can go back to the weekly and get your other resistance line, and voila. See, you got that there. I like to make this thing red so that I know the parameters of which I'm trading. You know, these are my major trends. So now I'm going to go back to the hourly chart. So basically these are my major zones for this is the major zone for the weekly, which means this point is very strong, and then it means also this point is very strong. So perhaps we're likely to see this movement moving up here in the next coming weeks or months. So now that I got this, I'm going to be drawing my trend. As you guys should know that I'm a trend trader, and I like to be in the direction of the trend. I don't like to be trading against the trend, because it's basically suicide. Okay, these are some major moves that occurred during the day today. I didn't place any trades today, so I'm just gonna be making this webinar. I was very busy today, so I couldn't trade, and I hope you guys will enjoy this. I'm gonna move back to price action. I prefer using candlestick pattern, because when I started this I was told that this is the best thing to use. So I just want to focus on PA, and yeah, I'm gonna be doing this. Let me insert the key indicators. First, I'm gonna start with the moving averages. Moving average, you want to make this a 7, and it's simple, it's yellow. Make this line thin. Oh, by the way, as you can see, this golden strategy, this very strategy that you see, that I call aka Pegasus, meaning the flying horse. I call this the flying horse because, like, when I was new to Forex, I was trading using these indicators like stochastics and all, and out of all the pairs that I was trading, gold seemed to have its own mind. It was like a wild horse. In fact, it wasn't like a wild horse, it was like a flying horse, something that is crazy. So I had to develop the strategy that could fit only for gold. But then after that, I improved gold to gold plus. So you guys are going to be seeing the Pegasus strategy, which is this one, and then you're going to be seeing gold plus. Okay, so this one is called Pegasus, the flying horse, and then the next one that you guys are going to be witnessing is called gold plus. Okay, and that strategy is for those who don't wanna let the market take anything from them. The one after this one is a strategy that takes money in any direction. Okay, you'll come see when it comes. So far, let me show you the Pegasus strategy, because this is very powerful. Huh? It's one of my favorite strategies because it gave birth to my new strategy that I formulated after Gold Plus, which is called the breakthrough strategy. And you guys are going to be seeing many more videos on the breakthrough strategy. It's separate. It doesn't include many of the indicators such as the ADX and the MACD. It only has moving averages. That's all I use, and you guys are going to be happy to see it. Anyway, let me just start here and impart you with the knowledge of trading gold. So you want to make this simple. Insert indicators, moving average. You want to make this one exponential. It's still 7, period 7. I didn't change anything, so set. Then you want to insert another one like this, moving average, simple, 15. You're going to make this one dark orchid. Yep. And then you're going to have insert indicators, moving average, which is of 13, of period 13. You're going to make this one aqua and okay. So I'm going to be explaining how I use these moving averages, and then after that I'm going to insert another indicator, explain how I use that with in addition to this one, and then I insert another indicator which I use in addition to this one, and then overall I'll show you how to work them all combined into one. And remember that there is only one thing that I always suggest to my students and everyone who's learning, and that is you should know that the trend is your friend. Okay, the trend is your friend no matter what. You want to be in the direction of the trend. And earlier on today, it looks like we had this bullish sentiment. Then we had the pullback. Normally after strong news you get something like this. It pulls back, so it was anticipated. But I wasn't in the trade here. I was like out. So now that I got the moving averages on, I'm gonna show you what I call the crab claw. Okay, basically how this works is that you wait for all the averages to cross. As you can see here, this is a minor downtrend. Sorry about that. As you can see here, this thing is a consolidation, but this here is a minor downtrend. So whenever you get a cross, say for example you got this cross over here after this candle formation, you got this cross. Let me do it here. You got this cross. This means that since these things have crossed, forget everything that is happening on the right, forget everything this side, just imagine this. You got the cross here and this. Imagine that this hasn't happened yet. Like imagine this from this point to there hasn't happened yet. So what you want to be doing is you want to look at the cross, and basically before these things come back together, they have to spread. As you can see, they are spreading, and then eventually they are going to come close together. I call this opening the crab claw. You have to wait for the crab claw, and then when you know when to get out, when you get to a line of resistance, or when the crab claws start to come back together. Okay, now basically here, since this is a consolidation region, I have a strategy for a consolidation region. I wouldn't advise you guys to use gold, to use this strategy in this consolidation region. Okay, I just use it for trend trading. And this region, I have formulated another strategy on consolidation, and you guys will see a future video on it. So basically here I just want to explain how to use the golden strategy. If you guys happen to be trading gold and then you come across a consolidation region, just apply the other strategy that I taught you that works with consolidations. So I'm going to be zooming out, and I hope you understand what I'm saying. All you wait for is a cross. They cross there, and when they are consolidating like this, You don't want to be in a trade. When they all come together, you just want to let the market do its stuff, and then after, bam, this candle formation. This is a entry formation. Whenever you see a strong candle after a consolidation like this, like for example, like you got this little consolidation, and then you get this candle here, a huge one after a small formations of candles. This is an entry. Now this point that I'm talking about is when you reach the level of using price action only, where you don't even need the golden strategy, or you don't even need the breakthrough strategy. But as time goes on, when you trade these things like a lot, when you trade the strategy a lot, including my breakthrough strategy, you guys will realize that this pattern forms quite a lot. As you can see, small little candles, then this one is a sign of an entry. And you can also see it repeating here. Small little candles, this one, that's your entry. It always happens all the time. This one, that's your entry. See, let's go back in time. Let me show you. Let me show you how it works. What is that? Watch, here is another one. Small yen, and then this candle. That's your entry. I'm just gonna show you a couple of them. Even here, pull back, consolidation, and then you got that candle there. And also, for confirmation, you will see that these things are separate. They are apart. That is one of your key. The crab claw is started to open up, and then it's apart. And normally, guys, the reason why I say the trend is your friend is because the most potent moves, like these sharp moves that you see this whole line full of red, this trend full of red. With this strategy, you could actually get all these pips from here today. Basically, all you need to do is just be with the trend, because these kind of moves only happen in the direction of the trend. And then after that, you just want to be in until this. You see it's starting to consolidate, so you can get out here and wait for a confirmation. So it's consolidating, and then you got this thing. See, this is why I say the trend is your friend. Imagine you had bought it over here. I told you to get out here. Imagine you had bought it over here, and then this little thing. You mean you'll be stressed for so long? Imagine you exited over here. You'll be stressed for 1, 2, 3. In fact, let me do this. And let's say you entered your trade here, and you exited it over here. I mean, you came out of the trade over here, and then you bought it again. I mean, you're basically gonna be stressing on a consolidation zone for quite a while, huh? It'll be like this is a whole day, imagine, and this, like over here, this is like more than half a day. Half a day is over here. So these things that I've just put represent a whole day. So basically, it means that all of this, like from here to between here, is half a day, and then from here is another half a day. This thing is like 24 hours. So imagine you bought it over here against the trend. You're gonna be waiting so many hours before you can get that powerful movement, and which is not even powerful. It's just a smaller movement. So you don't want to be trading against the trend. Just wait for the trend to fix itself, and then you can enter. Okay, that is why I don't advise to trade against the trend. So now that I've explained how I use the moving averages, interaction of the trend, and in the opening of the crab claw, I'm gonna include something that I use, which is called the MACD. Now you guys can pause the video if you want to and insert whatever you want. So these things should be at 12, 26, 9. Colors, I prefer light sea green and red. And then here I change this to a bold line. See, I just selected that one, and then there. And then descriptions. What should I add? Let me do this. 0.0. 6.0. And then I think that's all I want to add. So I'm gonna see it. Oh yeah, by the way, check silver, you must fix also this. And then I want to insert it, and then it will come up with my own type of MACD. So basically this is how I use the MACD. Notice over here we have a bearish trend, right? This is moving down, and then here the MACD, it was bullish from this side up to where it touched the strong resistance line from the weekly that we drew. Wait, is this from the weekly? Okay, from the hourly that we drew. Sorry, I meant hourly. The weekly is up there. So as you can see that the trend was slowly coming up, and as it was coming up, let me pick this region. It was up, it was fully up, right? And then when it got here, it reached the resistance line. It formed this M, which represents a trend reversal. It broke here, and you wanna. So anyway, when it begins to retrace, you see that the volume, the MACD, it comes from this bullish. When the MACD is above, it means it's a buy. Okay, it means it's representing the volume of buyers, and then when it's down, it's representing the volume of sellers. That's how I use it. So basically here it means that the buyers were slowly increasing, and as you can see that these bars are getting larger and larger and larger and larger, then they reduce, and then they go up. So when it comes to this major trend where the market turned back, you can see that the volume of buyers had come to an end. You see this? You see that the volume of buyers is just sees it has stopped, and then slowly this volume started increasing. So this is how I use it. Imagine like in everything that is on the right side of this cross, on the right side I mean this zone here. So say this part hasn't happened yet, okay, and you see the cross, you got your cross here of this moving average. I already explained how the cross works. And then look at the MACD here, you got the volume increasing. This is basically a sign of an entry. This is another confirmation you can use. So you can sell it there. You can keep calm because the averages are apart, and also the MACD is also increasing in volume. Just watch, volume keeps on increasing, and it increases because it's on the direction of the trend, and these things are not even crossing and they're still apart. They are parallel here. These things are more parallel than they are converging, or they are coming together. And here the volume of people keeps on increasing, the volume of sellers keeps on increasing until it reaches a point where it is maximum and it starts reducing. Now you see buyers, since it's starting to reduce, buyers are starting to enter, and then it reduces. It finally goes up for a little while, and then here it becomes bearish again. So that is how I use the MACD. I use it in direction of this with the volume. As you can see, volume is reducing here, and this is about to cross. I'll wait for my confirmation. That is my cross, and then I'll enter my trade like over here and sell it, and then wait for it. You see, I entered it over there, and it was in a bearish movement, and this one was also increasing. And then another thing that I like to trade, this will help you spot a consolidation zone. Okay, what I'm going to insert now is called the ADX, the average directional moving index, which is this thing. So now I already edited this on the previous video that I was talking about. You want to set this thing, the style, to aqua, period should be 14, and this one should be made bold. And then your colors, I changed this to lime, and then I changed this to red. This is the positive DI line, this is the negative DI line. Basically this one talks about the bulls, and this one talks about the bears. Red means up, red means down, green means up. the levels I added, this is 20, it's a consolidation zone, 40 a strong trend or visualization. So I'm gonna insert this, and this is how it looks like. Basically, by consolidation, this means that anything that is below the 20 level, which is this level here, it means that everything below this is consolidating, and everything that is above the 40 is in a strong trend, is really trending in that direction, and this means it's highly trending, and it's probably it's probably about to run out of steam, and then it's gonna continue again. So here, all you have to do is wait for this thing. See, it's a trend. Let me talk about this region again, this zone here, this whole zone here, and then this zone. This zone. So basically what you're waiting for is you're waiting for the green or red line to break above this 20 line, and as it breaks up, you compare it to your first signal, which is let's say this is your entry here. Okay, you got a breakout. Let's say, you see, we say this is our entry, these things are apart, right? We got this trend as a support, and then we also have the MACD volume starting to increase. It was the buyers were reducing and the bears were starting to come in, and we can also see this thing is above the cross. It was consolidating, and then the bears started to take control, meaning this is another confirmation that you can sell it. Oh yeah, I almost forgot, this is one of the things that I use with this, and that is the supply demand. I really almost forgot about this. Basically, the red shows you a region of selling, and then the blue part, which is this part here, shows you a region of buying. And that's all with this. All you have to know is when these things cross, and when the volume starts to reduce, you know you're about to make some money on the downtrend. And then here you just wait for this to cross. Okay, so now let's go ahead and test this strategy, because all I've been doing is just explaining how to use this. In addition to the MACD, there's something I didn't mention. The MACD is not only just good for telling volume, okay? It's also used to tell what is called divergence. Now, divergence is a region where, let me see if I can spot a divergence. I'm gonna try to spot a divergence for you guys. Okay, look here. Basically, this is what divergence is. Oh, this is a nice divergence. Let's see. Watch this. Just watch what I'm doing. Do you see what's happening? Like this, from this point, in fact, let me just add another one here so that you guys can see. Do you see what's happening? This point is higher than this one, right? As you can see, this point here is higher than this point, but on the MACD, this shows that this point is lower than this point. That is what I mean by divergence. Okay, so this can be used as a way to enter into a market, for buyers to enter or bulls also to enter. Sorry about that. Oh, so tired. It's like 12 a.m. here, and it's really cold since it's winter. It's winter season. So basically, that is what divergence is. You're looking for points where are similar to what I just showed you. Okay, and these things happen everywhere. They don't just happen in the downtrend, they also happen in an uptrend. So in this video, we're not going to be discussing divergence. I'm just going to be showing you how to use gold. And that was just one example of divergence. So I think you guys should find out more about this divergence, from divergence to hidden divergence to convergence, things like that. So guys, I mentioned in one of my videos on how the different types of trends, you got the staircase, the consolidation, you got the sleeping trend, you got the trending trend. So those are the type of trends that I talk about in one of these videos. It explains the different types of trends, so you guys better watch that, and then I think you'll be in now with gold. So first, before you enter any trade, you need to ask us, do I know my zone? What are the parameters? By the parameters, I mean this area that we just spotted. These are our parameters. Are these? We know that we are trading in a box zone, in a consolidation zone. That is one of our parameters. We know that this is formulating in a triangle. As you can see it's formulated there. And we know that we were already at a higher point and we went down, bearishly down. Now we know we're looking for an opportunity to buy here. We're looking for opportunities to go up. And that's if this trend is not broken. Okay, so basically we know our parameters now. So we go back here. So let me start here. I'm gonna trade the staircase. I know I talked about this, so you guys should be knowing what I mean by staircase. Where is that staircase? Well, let's just get it on the sleeping trend. This is the sleeping trend, by the way. Let me just zoom in. Zoom in. What is Forex? What is Forex? So alright, we know the trend. What we can see is that the trend was fully down, and then we can also see that this trend has reached what we placed on the weekly as an up. You remember we placed this on the weekly and we got this, and we got the major trend, the uptrend, like the uptrend trend line in this region. So we can see like it's here, which means that trend is about to change here, because this is a very strong place, and then also we drew this on the weekly, and that trend lasts for a whole week. So now what we want to be doing here is we're going to be starting to look for buy opportunities, as you can see. And as you saw, as we were pulling back, that this thing suddenly went up, and now I was just telling you why it went up here. So say for example we're here. Let me do this. Yeah. Let's see, we got a cross. This is our cross. It was consolidating. We got a resistance line. We got this buy zone here. And then we got slowly down. We see, let me do this. You enter confirmation. We got this here. We see that the MACD's volume is increasing. Do you see this? We got this crab claw cross opening up of these things, or the crab claw opening. And then we got this strong bullish candle formulating. We also have this region, supply demand zone, and we can see that the ADX is no longer consolidating, and that this green, the green signal has started to go up, as it has gone beyond the 20 level. Sorry, I meant to say it has gone up this 20 level. So which means we're expecting a strong bullish momentum. So say we bought it, let me do this. Say we bought it here. Say we bought it here. And we stay in the trend until we reach a resistant line, or the moving averages start to consolidate. So let's see how we go. See, the moving averages are still apart. The MACD is still on. So they started to consolidate. Do you see this? So meaning you can like get out when it gets to this line of resistance. And then that would be, how many pips would that be? You entered over here. So that would be like 105 pips and 9 pips. I'm looking at the number in the center, like the 1059. The first three digits, those represent the pipette, and those represent the pip, and the 9 represents the pipette. So let's see what happens now. It appears to be going down. Volume is reducing. This side is consolidating. This one is not yet even showing us something strong. But since we know that this is a major zone, we anticipate that it should be going up. And this is without using any indicators, but we're using just the trend. So let's see what happens. We're waiting for a confirmation. Wait, that's not a good confirmation. It's ranging. You see, even on the stochastic is ranging. Even here I started to range. But here is a buy. Do you see there's a buy zone? I'm anticipating that this is going to be bullish, but we just want to be trading this strategy right now. Let's see. Let me do this. I don't want to say this is a buy because of this, but from the rules we can see that you got a breakout here, volume is starting to increase, these things separated, but you would like to wait for another confirmation, and I think this is a good confirmation. However, this is a consolidation zone. Do you see that this is a zone? So you just want to wait a little bit. And then it broke this zone here. Do you see this breaking point? Like over here. This would be your entry, your perfect entry. You enter it there and you're good. Volume is increasing. These things are strongly separated. This was your buy zone. And okay, let me say this. You could have bought it over here, okay? Reason being because of this trend thing, but I want you guys to not be aggressive and just start entering any trade. You know, that's how the big guys, me, trade, okay? You guys shouldn't trade like that. You should wait for the confirmations. This is why I am telling you to wait for these regions to break. So you could wait for this break and then just ride it up, because I normally trade the trend and I want it to go up, and which is obviously going to go up. Do you see where we entered? We entered it over here. And what did I tell you? It is obviously going to go up. Why is it going up? Because this was a formation of an uptrend. Do you see that? Remember, we entered the trade over here. We entered it over here. We entered it in the zone. We entered it in the zone. And we held our position. And we still want to hold our position until we can see something that is strongly against us. It's still going up. It's still going up. And then, did you see this in? And then we get this. Did you see this? So this is where you wanna be. You wanna be careful, because you get something like this, but the trend is still up. So we got something like this. This probably is kind of a bearish sentiment, but let me see how many pips we gained from there. Where is that thing? Where is it? I don't even remember. Oh, this is the point. So say you held it in there. Look at how many pips you would have gotten. Just watch. These are like 561 pips just by holding a trend. Okay, now that's how powerful a trend is. The movement will always be up. The new movements that will always form will always be up. And the reason why the market would change is only because it has reached its major daily or weekly resistance point. That's why the market will return, okay? So even here, even when you saw this, you could just hold on to the trade. But for new traders, you just want to be getting out when you see something you're not familiar with. But the major resistance points that occur on the daily and the weekly, now those ones are the ones which saw a trend change. So as you can see, we just entered here and got out here, and that was like 500 and something pips. So that is how you trade this thing. Okay, let's go on another pair now. Not another pair, I mean another. Let's find another spot to trade. I'm zooming out. I want us to trade like this zone here, and we can see that overall formulated a staircase. So I'm going to be zooming in. It's too close. What was I trading? No, let me find a bearish region. The trend is your friend. Remember that nothing beats the trend. The trend is your friend. What did you learn today? I learned that the trend is my friend, and that if I trade against the trend, I will blow my account. Do you want to blow your account? No, then don't trade against the trend. Do you want to blow your account? No, then don't trade against the strategy. If you trade against the strategy, you will blow your account, okay? Do you get it? You don't want to be trading against the trend, and you don't want to be trading against these averages, the opening of the averages, or the increasing volume here. Or you get swiped, swipe, pa, and the market will beat you so bad. The secret to Forex, guys, is just trading with the trend. That is the only secret. That's the only way you can make money. The reason why I say this is because, watch this, the market moves in formulas. It moves like up, and then it will come back to the previous line. It does something like this. You see, up, come back, up, come back, and then these things always break up and come back to the previous line of resistance of which it broke, and then it will move back up. Okay, at most it will come back to at least half. You see this movement is up there, so it will come back at least to half, and then move back up, come back to the line of resistance, up. Now notice I said at most. It will at most sometimes it will come back to, it will go up and then come back to half, to that half point region. But mostly this happens, like you get this a breakout and then it comes back. Let me do this. Say you entered here, you'd have this strong movement down, right? And then after that strong movement, the market will come back to the previous line of resistance. You see, it moved down, it came back to the previous line of resistance, and then it moved in the direction. That is why that entry that I told you about, that is why I said you could hold it for a long time. Okay, it is because of that. And it will break out. It broke out, you see, and there's probably a line of resistance here, which is where it went down, down, down. It came to this resistance point, pulled back to the previous line of resistance, which is around here, which is around there. You see, and then it broke out again, and then it'll come back to the previous line of resistance, and then it's gonna break out. Come back to the line of resistance, break out. This is the formula of Forex. This is how you make money. Once you get this, I don't think anyone can ever be broke unless they don't manage their money nicely. Let me put this here. So now that we're trading the golden strategy, let's see what happens. We got this strong bearish candle. We got the breakout in the ADX, and volume here is increasing. These things have separated. So we got a buy region, the supply demand, the cross of the crab claw. We got a reducing volume here of the MACD. We got the cross on the ADX, and then we enter it over here, and then they're still coming down. Now you can hold this position because the trend is your friend, right? I told you, hold it. Yeah, I'm there. It's consolidating. You see, it pulled back to there. Hold it. Let's see. Oh, it's starting to go back up. This is because the volume is starting to increase again, and it's still closed. So say you entered over here. You entered over there, and then you got this one. And then let's see, that is like 312 pips. And then you got a line of resistance here, a pullback, move back into a direction, then this, and then once you see this thing, you can be like, okay, let me just get out of this thing, because this is a strong bullish candle and you don't want to be trading against the trend. And then that will be like how many pips? 213 pips. But once you see like the cross in the other direction, you could get out and not trade this region. Okay, not trade it. Once you get out at this point, and once, let's say you're in, and then something like this happens, and then these things start opening up, don't be entering in the direction of the trend. Okay, just wait for the market to do its stuff, and you'll see it's probably gonna continue going down there. Just hold that position. Just wait for it to show itself in its new direction, in the direction of the trend. Okay, don't be like, oh, it did that and did that. So let's see what happens. Volume of buyers is reducing. The ADX wants to cross. Let's wait for that perfect cross. Okay, consolidating, and then bam. See, this is what I mean by don't trade against the trend. Imagine you had entered over here, and then you wait all these hours. This is like how many days? So many hours. 1, 2, 3, 4. It's just so many. I don't even want to count it. You would have waited for 1.5 days, because this just broke out here. If you had entered it in this, you would have entered it probably over here, and you would have waited all these hours and gotten into a negative here and that, and then after this whole day and a half of stress, you would see something like this. The best thing about this is that if you see the cross in the direction of the trend, it means that it's going to be strongly down. Okay, a cross in the direction of the trend, this is a downtrend. It means I'm expecting like these movements to be strongly down, and I'm not surprised by these, because I know what I'm doing. Down, down, down. See, and then here it started to retrace. Let's see what it does. Oh, why did I just zoom in so much? I want to see the full body of the trend. Where was I? Yeah, but I lost where I was. Oh, I was around here. You see what I mean by the trend is your friend. Just imagine if you entered your entry here, you got your cross, you got your volume reducing here, you got your ADX crossing there. Let me not say here, let me say it here, at these points here, and this dotted line. Imagine if you entered here and held this whole position up to there. You'd be lacking a lot of profits. But like I say, exit where you see these things starting to cross. One day you entered there and they started to cross again here in the opposite direction, so you just get out and then let it pull back, and then when it shows a signal to sell again, like this cross here, this is a signal to sell, you can sell it and then wait for it and then enter it and then exit it over there. Let me do this. So let's go back in time, back. Why is it that I can't find a nice zone to trade today? Is it because I didn't enter those trades? Yeah, I think it's because I didn't enter those trades. I wish I could see the overall movement of the market. So let's see if it crossed across, volume down, and that what happens, bam, those are your profits. Wait for it. Imagine, yeah, this is where they started to cross again. So imagine we entered it over here, we entered the trade over there, and then it started to cross again here after this. So you could have exited it over there after you see the cross, which is around 183 pips, and then wait to see what the market does. So consolidating, and then let's see what happens. You got this strong bearish candle, but it's still in the movement, which means that this thing should be in a downtrend. But let's see what the MACD and the cross does. Yep, and this is your entry. This shows an entry. Volume is increasing down, and you got that. Let's see what happens. Bam, you got your profits into the consolidation zone. You entered it over there. That is like 116 pips. Then you wait for it again. Bam, there's your entry over here. There's a breakout, by the way. There's a breakout. Volume. Let's see. Oh, it didn't move as potently as I expected. It just moved from here and then started drilling him back up. But so long as we followed the rule, you entered it over here, you held it, and started seeing a consolidation, and then after that you started seeing this breakout. So you probably get out, but you wouldn't have gained as much profits as there. Let me see how much you would have gained. Let's start to separate over there. Okay, this would actually be a losing trade, because look, this is like 19.3, but who cares? You gained all these pips, and you gained all those other pips too. This is why it's good to trade knowing where the direction of the trend is, because right now I don't even know where the trend is going. I can see this is a downtrend, and then here you see something like this. I don't know where it's going. It's not showing its full direction. You see that? This is why I like I trade like this. Okay, so like if I see something like this has formulated, I know that this is a downtrend and I should be looking for sells. The reason being is because it's going to continue going down. Do you see? This was a downtrend, as I said, and then it still continue going down until you see a line of resistance to exit. Okay, so let's find another point. I just want to zoom out because this thing is not showing me a clear movement of what's happening here. Guys, remember what I've been saying. You want to be entering trades in the direction of the trend. So after that, I think you basically know how to use the strategy. Just look for volume increasing. The first look cross, which direction is the trend. It had come readied up and it moved into this zone. It shows this rejection candle and these ones here. It crossed here, volume started to reduce. You got the ADX crossing, so which tells you that this is a sell. This is how the strategy basically works. Cross MACD volume, this, which trend is it going down? SL. Yes, you enter, come out at the next line of resistance, or when the moving averages start to show that they've converged and that they are starting to separate again. And you converge, you see converge, and see if they start to separate again. You see, are they separating? They're separating the trend, so you could enter. But it's consolidating. Let's see what happens. Volume is going up here. Oh, this is the point, the point from earlier on where it started going up a little bit and then it dropped. So basically your exit is where you see, say you entered here, your exit should be something like this, where you see them converging and then you see a strong bullish candle, which suggests that these things are about to move in the opposite direction. That's when you get out. Okay. Or if you want to be safe, just exit it at the point of resistance. At the point of resistance. Wow, it's really late and I'm so tired. So guys, that is basically the whole strategy on gold. The Pegasus strategy, the one where you use the moving averages and the MACD and ADX and supplies and demands, and also the trend is your friend. So basically that's how you use the golden strategy. Now I want to do or formulate a new strategy that is called Gold Plus. I'm not going to do it in this webinar. This one was strictly for gold. So I'm going to stop this video and then I'm going to be doing a webinar on Gold Plus. And for those who bought the Gold Plus trading training will benefit from it. And it was nice having you guys around. To those who are watching me in the past, so all I can say right now is shalom. I'll see you in the next video. Peace.